So if you're like most first-time buyers, you probably put less than 20% down when you bought your property. You might have put 0 down or 3 or 5%, maybe even more, but it's really rare that people actually put a full 20% down, especially when they're buying their first home. So with that said, you might have on your current mortgage payment something called PMI or mortgage insurance included in your total monthly payment. How long do you need to wait to get rid of that PMI? And what is the refinancing strategy that would allow you to do so? In today's training, I'm going to go over all the details with you. Hey, it's Robert Weinberg, and on this channel we empower people to take control of their future through expert mortgage and financial strategies. If you're new to the channel, please go ahead and hit the subscribe button. Also click the bell so you get notified for any and all of our future content. So in the lesson today, I'm going to be talking about a refinancing strategy that will allow you to eliminate the PMI or the mortgage insurance on your monthly mortgage payment. So what is PMI? So when you purchase a property or refinance a property and you have less than 20% equity in the property, then you're usually going to be required to have this PMI. There are two main exceptions to that, which are going to be on a VA loan. The VA loan does not require a monthly mortgage insurance. So if you're an eligible veteran and you have a current VA loan, then you may not have this. And also on a non-QM or non-qualified mortgage, there typically will not be any mortgage insurance even if you only put a 5 or 10% down payment or less than 20%. Now there's some other criteria that may allow you to actually not have mortgage insurance, but those are the most common reasons why if you put less than 20% down that you wouldn't have it. So assuming that you do have mortgage insurance, how long do you have to wait to look to get rid of it? So the minimum amount of time that you have to wait to get rid of that mortgage insurance is going to be 6 months after you purchase the property. And the reason is because Fannie Mae and Freddie Mac have specific criteria in that says if you try to refinance before that 6-month mark, then they're going to go off the lower of the the purchase price or the appraised value. So even if the house is worth $500,000, if you bought it for $400,000 3 months earlier, they're going to go off of that lower value of what you bought it for. If you wait till after 6 months, then they'll allow you to actually go off the current market value of the home as determined by an appraisal. So almost in all cases, you will be required to get a new appraisal of the property to show what that current market value is. There are some circumstances, and I recently had a client who we did not need an appraisal for. Fannie Mae and Freddie Mac had enough data on their property in the database that they gave us a property inspection waiver, PIW, and we were able to eliminate the PMI without them even needing an appraisal. But that's rare, and in most cases you will need to get an appraisal to show that you'll have at least 20% equity in the home at the time of the refinance. So if you're someone who bought a house and got a really good deal on it, maybe you had some built-in equity when you purchased it, or maybe you did some improvements, or the market has just gone up drastically since you purchased. Those are going to be the main reasons why you'd be able to get rid of that PMI in a short period of time. But even if you don't have a full 20% equity, if you have 10 or even 15% equity, you may still be able to better your financial circumstance by refinancing if you work with your mortgage advisor and consult with them on something called lender-paid mortgage insurance, or LPMI. So what that allows them to do is the lender can structure a loan in a way where they can buy out the small amount of PMI that you have on your loan and effectively eliminate that mortgage insurance entirely from your payment, even if you have less than that 20% equity. So definitely consult with your trusted mortgage advisor to see if that may be an option if you have less than that 20% equity. Now, a lot of people get caught up when refinancing in the interest rate, but the thing is the interest rates are constantly changing. So when you bought your home or refinance last, the interest rate might have been lower than what it is now. Don't rule out refinancing just because your rate is going to go up. You need to look at the entire picture and the overall financial strategy to see if it's going to make sense. So even if your rate stays the same or even goes up a little bit, it might still make sense to refinance your property in order to get rid of that mortgage insurance. You just have to, again, look at what is it accomplishing and are you going to be able to get rid of that PMI and lower your monthly payment as a result of that. Now, an advanced strategy that I teach a lot of my clients is if you're used to making a certain payment, let's say $1,500 a month, and then you get rid of your PMI and your new monthly payment is $1,350 a month. Well, that saves you $150. But rather than just going and saving that $150 a month, one thing that you can do is just keep paying the exact same amount that you were used to paying. So even if your new payment's $1,350 with no PMI, keep paying the $1,500 that you were paying before getting rid of the PMI. And what that will accomplish in many cases is it'll allow you to accelerate the payoff of the loan and actually pay it off several years sooner and drive down the effective interest rate that you're actually getting, as we've talked about in some of my other videos. So that's one strategy. And the other thing is, depending on how long you've owned your property, it might make sense to go ahead and take your loan and accelerate it down to maybe a 15 or a 20 or a 25-year term. In some cases, if you paid your loan down enough, you might be able to shorten the term of your loan, eliminate PMI, and not even have your payment change much, if at all, from what you're paying now, and really accelerate that payoff, as I said, down to a significantly lower term payment option when you refinance. So I hope that this has given you some good value. I hope that you'll share it with others that may find value in this training. And please go ahead and follow me on social media. If I can be of assistance to you or anyone that you know in the home buying or refinance process, please reach out to me via call, text, or private message. Thanks again, and we'll talk to you soon.